Breaking news out of the market today. The Fed comes out and says that they could potentially do up to $95 billion of QT next month. I mean, that is bombshell. The market was down like a measly 100 points too. So it seems like the market is shrugging this off. Will they continue to do so? Personally, I don't think so. I think we're probably just building up where the market doesn't care at all. Why doesn't the market care? I think we could just see a situation where nobody cares until everybody cares at once, as the old saying goes. So what are we doing with our own portfolios now? Justin, what are you doing?
Well, my portfolio generally is focused mainly around GME and the other meme stocks, but I sense that, and this is, again, hat tip to PiFi and, the wonderful content he provides, but I think that we're going to be in a crabbing stage. That is, I think it's just kind of going to, well, I suspect you're going to see consolidation. I don't know what's going to happen, but I have to guess. I'm guessing consolidation. And so that means, again, hat tip to PiFi for this one. Started looking seriously into iron condors as just kind of a way to make money when GME goes sideways, or I guess really anything goes sideways, but GME in this particular case. That's probably my big thing. And just, the occasional writing of covered calls, cash secured puts, just depending upon how I feel. Very technical.
Yeah, talking about iron condors, I've actually opened up quite a few iron condors on GME myself. So basically, what an iron condor is you're betting that the stock's going to make a trade within a range. And the way I set it up was I had the legs going down pretty low. Basically, I'll make money if the stock's between 134 and 148 in like 20 days. The reason for this is mainly because I have a bunch of calls. And so right now we're trading what, 155. So if we see the stock start to go down, which personally I think it potentially will if there's no real catalyst, especially if the market's having a little downturn. So if we see GME go down a little and trade within this range bound situation, then the risk to reward is actually very favorable. For one of these, it costs about 50 cents, and you're making about 450. So there's almost a 10x risk to reward because the volatility is so high on the stock. And I'm very happy with that. Maybe you buy, I don't know, like 20 of them, and you can potentially make some serious money as your calls start to bleed out. And then you can just kind of roll those into further calls or further iron condors, which is, I think, is going to be very favorable for the future. And what happens if GME stays high or continues to go up? Then you have those calls to offset it. The only way that you really lose money is if GME tanks and we're below 134 in 20 days. Possible. I'm very fine if that does happen. Then I'm sure the calls will be very cheap. And if it doesn't happen, the other way is, let's say we're still at around 150. We just crab this way. Then you know what? Great. I lose my initial investment, but that's kind of why you play the game. Some other things that we were talking about this a little on one of the most recent live streams. I did put on quite a few SPY puts like last week when volatility was really getting crushed, and I was definitely a buyer at volatility when the VIX was at like 18, 19, just in these circumstances when, I mean, today the Fed came out and said that they're going to do $95 billion of QT next month, potentially, which that's really going to put some dampers. I mean, we already had the inversion of the yield curve. So I think there's a lot of risks in the market, and I'm playing that by buying volatility via SPY puts. Another thing that I did was I bought some more shipping companies, not Zim, I like DAC, GL, or GSL or GLS, TGH. There's a few names that are really just pumping out cash. I'm slowly building a position right now because if the market does shrug this off, or I think shipping, there's some real catalysts that could crush it in the next few weeks. It could go either way though. This is more of a topic for a different video. I'm slowly building a position because I am kind of bearish on the market. Really would love to buy, like, I put a massive stake into these companies because they are just spitting cash flow. And I think they have, especially with everything going on with Russia, I just see a great shorter term future, especially while GME's kind of crabbing along, playing some iron condors on that. That's pretty much what I'm doing. So if I could advise you, I would probably buy straddles on GME and go long the market as well as going short shipping, as that is the complete opposite as everything that I'm doing. Me and Justin have similar views where something drastically different is going to happen.
Yeah, and like I said, I mean, when it comes to the market, I guess my attitude is, I think for the time being, I don't see anything insightful to say. Like, it's just, whatever, it's just going to crab.
I'm a big fan of Kevin Mears. I probably mentioned him a little too much, but he thinks that we're in a market environment that's probably going to piss off the bulls and the bears, because if you're looking online, there's a lot of bulls and a lot of bears. So the market wants to hurt as many people as possible. Personally, I hold a lot of value names like shipping, gold, silver, some commodities. They're though even though they're getting hot though, and then GME. So wildly different stuff. I mean, my biggest position is still GME, but I still have I'm actively trading all this other stuff as GME is much more of just like a sit, hold, and pray type of thing. What would hurt my portfolio the most is if let's say tech comes back into play. Let's say we have a risk off and I mean a risk on environment and we start to see the Nasdaq truck about that's what probably value gets crushed and the metals start to tank. Maybe that drives GME up with it though to offset it, who knows, but that would probably hurt my portfolio the most in the current conditions. The reason I think that is most unlikely just because we just see more and more shit happening. We see like pretty much anything that could go wrong is starting to really go wrong. Mortgage-backed security yields are really starting to go up, creeping past 5%. That's going to put a damper. I mean, the yields are skyrocketing. I'm pretty sure the 10 years, like 2.5, like 3, somewhere in that range, 2 years still above it somehow. So we have a still pretty steep inversion, getting worse in a lot of places. Still, repo failures are spiking. There's nothing good that is happening. The war is not really getting any better. I don't see any situation like unless we see some sort of CARES Act and a bunch of money printing. Who knows? This is really just me spitballing. Justin,
From the real estate side, if interest rates for mortgages continue to go up, I would expect a massive cool down in the market. As it's cheap debt is what's or in my opinion, cheap debt is one of the things that has allowed the prices to go to such heights. Now, will there be a bubble bursting? That I don't know, but I would not at all be surprised to
what
see.
were you just doing in front of your properties today?
Oh, yeah. So we're in the process of wrapping up the some various single-family assets that we've had for our other investments. We've either have refinanced recently, or planning to refinance, or excuse me, for the properties we wish to hold, we've already have a refinancing in place. I can't say we sniped the exact bottom of the interest rates, but we got pretty darn close. So that's kind of the takeaway I see on that front. But I will note this that if you have the bottom fall out of the real estate market, I just kind of wonder how similar will that be to 2008. Now, granted, I'm not saying it, so you're going to see another 2008 meltdown, but I am going to simply note that if real estate's one of the main cores that's been propping up, or at least is providing collateral, and if real estate can no longer provide collateral to the extent it has been providing collateral, I don't know how that's going to play out. But it's just one of those things that it's on my radar. Going back to GME land, the question then becomes, where are we with the cycles? Where are we, especially with the quarterly cycles clearing out? So the question then is, well, what happened to the cycle that we thought was going to come in late January, mid-February? Jury's still kind of out on that. But the big news, I guess, going forward is something that we've already covered, and that's where you've got the stock dividend that's coming through. Now, theoretically, when the stock dividend is paid out, even though it's really an accounting entry, it's done in a manner where there is incentive for those who have loaned out shares to recall their shares just due to the way this thing has been put out. So anyways, I see that as ultimately positive. I don't know of when we're actually going to see this come into effect. So again, right now, GME hasn't done anything. They won't do anything formally until their corporate meeting, save announce that they want to do something, which is what we saw last week. So anyways, I'm curious to see how that's going to play out. But again, kind of like the vibe that I get right now from the little that I follow GME is I would expect consolidation. That's just kind of the vibe that I feel, and that's how I'm trading around it.
I'm very impressed with the relative strength that we've had. There's not a whole the FOMO is pretty much gone. Um, like we're seeing no real call volume, which is what we really needed and what we were pounding the table on. So what is going to take that call volume to come back? We'll need some sort of catalyst. And what will that be? I don't know. So that's why I think we're both in agreement that we'll probably chop around. And I'm really going to enjoy running some iron condors, hopefully until they stop working. Hopefully they even work because you don't want to just sit on your position. And this is pretty an active way to trade a choppy market. So, and it's very, usually you're never going to get a premium. You're never going to get a 10x return on an iron condor. The only reason is because the people buy volatility on GME, like they buy straddles or anything that's going long volatility. So this is basically just a pretty fun way to hopefully trade it and not make some decent premium while we're waiting for this next catalyst. We still haven't seen the FTD cycles. What's going to happen in May and June? I think that could be pretty massive. There was a bunch of, let's say the FTD cycles are humongous. And then Mr. Cohen, because I think he's very aware of these cycles. So let's say the June, 8 and May FTD cycles, OPEX, he then puts the stock split around that time. That I think that he very much well could be thinking of something like that. And I've been very actively buying January 2023 calls as implied volatility starts to decrease. Now, I'm not really putting heavy pressure on it yet because I think there's further IV crush before the real buy-in. Who knows? Yeah, so that's pretty much what we're seeing today, and we'll see you in the next